Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and you know the number. You call me now, you call me later. Difference is, if you call me now, probably going to be a lot less expensive than if you call me later. 800-951-0592. That is our toll-free number. The website at allamericangold.com, and gold and silver rocketing again today. Bond curve getting absolutely destroyed. No, it's not different this time. Sorry, but we're going to bring it all to you. Right now, gold is up almost 20 right now, 16, 17 dollars, 15.43, 15.43 in change right now for gold. Silver, I told you to watch out. Silver broke 17. It was going right to 18. Went right to 18 and then kept on going. Silver's up 50 cents. $18.15, and I'm just laughing because Jason, he's still calling people for. You remember we were running those rolls of silver quarters at $122? It was like, I don't know, a week ago, right? Your cost was $17.08 an ounce. Now I'm telling you, silver's $18.15 to the ounce. By the way, just real quick, I have 50 rolls of quarters at $130. This is it. This is the last of them. 50 rolls of quarters. Those are the silver quarters pre-1965. And at $130, put your cost at $18.18 an ounce. Essentially almost buying them at spot. The last 50 of them, get them out of here. 800-951-0592. By the way, silver, just getting started. Don't be surprised to see silver north of $20 before the end of the year. Right now, I'm not even talking about crazy price. Just right now, I mean a run of the mill silver should be like $22, right? I mean $22 to $23. So sitting there at $18.15. Jump on it. 800-951-0592. Did they call? Did they not call? Remember that yesterday? And I was like, hey, maybe China butt dialed them. China came out today and was reiterated. They're like, hey, we have no idea what Trump and Mnuchin are talking about. We didn't call these guys. But again, it doesn't matter. We have former Fed Governor William Dudley. Now, Bill Dudley, he was the Fed Governor of New York. So there's different levels of Fed governors, right? You got the chief, right? They're number one. And then there's the guy they call the vice, right? Kind of like the vice president. Nobody really knows who he is. Nobody cares. He's number two. And then the Federal Reserve Governor of New York. They're the big three. Everybody else, yeah, okay, we care, but not really. Right, these are the three big guns. He actually came out on TV this morning. Now, he's not the Fed governor of New York. No, he's retired. And I always said, right, wait for these guys to retire, and then they'll start telling you the truth. He took a major shot at Donald Trump and said that Jay Powell should resist the president and not lower rates so the economy will fall into recession and we can elect somebody other than Donald Trump. Things like the gloves are off. After all, Trump's re-election arguably presents a threat to the United States and the global economy, he said. Yes, he's a threat. He's a threat to the Fed's independence. You bet he is. Right? And it's so funny now. I know you guys out there, some of you guys are out on the internet like I am, all over the place, and a lot of us go to a lot of the same sites. You're seeing more and more. Is this the end of central banks? Listen, you have no idea what they've done. There's no way. I'm not smart enough. I don't know enough vocabulary to actually quantify and tell you what these people have done. But just know this. Here's the best analogy I can give you. They're in your wallet. And they live in there. And they bleed you dry. Everything you think, and I know there's a lot of my customers have done really well in life. They've done well. You could have done so much better. You could have done so much better. And for all the people out there, you know this. My heart bleeds for everybody out there that's working 2, 3, and 4 jobs just to get by. And now we got this clown, this former Fed governor, coming out on TV saying the president's a threat to everybody and let's crash the economy. Are you kidding me? Yeah. This is what they think of you. This is what they all think. When we return, I've been on my high horse about Social Security and Medicare and 401ks. We're going to dive into that old chestnut. Don't touch that dial. 800-951-0592. 34 rolls of those quarters that are left. You're going to be looking at $150 on a roll of quarters once we're out of these. Matter of fact, all the silver pricing's got to go up again. If you're just joining us, silver's up another 50 cents an ounce this morning, $18.15. We've seen that silver ratio blow out, right? We was up to 93, almost 94 ounces of silver for an ounce of gold. It's down to 85 ounces. I've always said I think 65 is balanced, but even at 70, silver would have to be $22. And you talk about gold at $15.42, $15.43. Gold's not going to $1,600. Gold's going to new highs, period. 1,600, 1,700, 1,800, 1,900, 2,000. Where does it end up? 3, 4, 5? I don't know. Right, but I do know how to do math. And then when you've got former Fed governors, and like I said, not all Fed governors are created equal. Bill Dudley, he was the guy that was the number 2 for part of Ben Bernanke and Janet Yellen. I mean, guys have been around. Talking about the Fed the Fed independence, that Donald Trump is a threat. If the goal of monetary policy is to achieve the best long-term economic outcome, Fed officials should consider how their decisions will affect the political outcome in 2020. The goal of monetary policy is to achieve the best long-term outcome. Fed officials should consider how their decisions will affect the political outcome in 2020. Dudley said the Federal Reserve should refuse to play along and go further than what Powell inferenced last week, that monetary policy may not be effective in staving off the economic damage from tariffs, saying that officials could state explicitly that the central bank won't bail out an administration that keeps making bad choices, right, on trade policy. Again, very much what we continue to talk about. There's nobody that thinks this trade war with China is a bad idea. We know we need to do it. And this clown does too. But you know what? That's not what the globalists want. make it abundantly clear that Trump will own the consequences of his actions. You're right. What a horrible person. Man, we got to get rid of this guy. Think about this, right? We should just let China keep stealing all our stuff. Right? That sounds great. You know what? Just let them be a superpower. Forget about it. Right? The demise of the U.S., it's fine. This is what they want. Listen, he's not wrong. He's just telling you the truth. Now, you may not like it, and you may not want to hear it. And you keep going along on your merry way thinking you don't need to know how much your portfolio weighs. Oh, you are mistaken. They want, and again, I guess another good analogy, right? The rising tides lift all boats thing, that's bull. What they want is to take the wealth from one place and put it somewhere else. Do you not understand this? How much more do you need to understand? You think I'm kidding? You think I'm making it up? Oh, Double just trying to scare me. Please. Trying to educate you. Right? You think I'm wrong? What happened to your pensions, America? Where'd they go? Where did they go? Whose brilliant idea was it? You figured it out yet? How many of you out there would love to trade in your crappy 401k for a pension that paid you $3,000, $4,000, $5,000 a month and paid for all your medical? How many of you would raise your hand and say, I'd like that back, please? You would think most investors, by the way, this right-wing radical newspaper, the tinfoil helmet wearing USA Today, wrote this article this morning. You would think most investors are fairly happy with their results 10 years into this rising stock market. Really, when you think about it, the Dow isn't even up 100% from the crash. Right before the crash in 2008, the Dow was like 14,000 and change. Right? I mean, you think about, I'll be kind and give them the 100%. Right? That was 12 years ago. I mean, that was 12 years ago. I mean, that's only 8%. And here's the problem. Got bad news for everybody. Dow ain't going anywhere for the next 10 years. Nope. Well, it may. Well, if it is, it's south, not north. But apparently, people aren't that happy. Huh. I wonder why. It's bad enough that I already told you about 401k balances. What was that, last month? Wall Street's doubled. Actual balances are down. Matter of fact, and actual balances of older recipients are just the same. About 70,000. If you're over 55, that's the average. When you include everybody, 401k balances are in the 20s. Now, some people just started working. But just so you know, right? Yeah, I know. I keep talking about that stupid commercial. What a great commercial, because I reference it all the time. People walking around with millions. Apparently, though, it's not the case for a lot of workplace 401k retirement plans. Unhappiness over high fees, right? Remember, I thought those fees were gone. I've been acting like, they're better. Yeah. Not for most people. Inappropriate investment options. Something I've never talked about. Well, I tell you, right, what do you get? You get the bar chart, you get the pie graph, and then they tell you, do you want to be aggressive, somewhat aggressive, passive, right? And you check a box. High fees, inappropriate investment option, and other issues have led to a huge spike in lawsuits in recent years. See, here's the facts, folks. Most of us aren't doing that much better. This was never, ever, ever, ever meant for you to base your retirement on. You know what this really was? Here's what was created. And this is the sham of all of this. They said, between Social Security and your pension, still not quite going to be enough, right? And the goal of the people that created the 401k is that this was going to supplement your pension and your retirement, your Social Security. Supplement. Because even in the early 80s, which, by the way, this has only been around since the early 80s. Even then, they said, man, probably won't be enough. We got to come up with something else. Give these guys an option to maybe, so that way, they won't have to downsize or give up their standard of living. Think about what they did. They turn this is really the only thing you have, isn't it? Right? This is it. No pensions. None of that stuff. They said that these trends affect nearly 2 in 3 adult workers with money invested into 401ks. This is how rampant this is. Believe you me, if you're out there and you're like, man, that's not me, consider yourself lucky. Consider yourself lucky. And you know what? The funny part is most of these balances, it was all your own money. People are so funny when they look at their balance. Oh, my balance went up. They don't realize, hey, I just added another $6,000 this year. Yeah, your balance went up because you put more in. I wonder, though, in the last couple of years, have they gone up? I know this. 1 year ago today, the Dow was higher. 1 year ago today, the Dow was higher. 1 year ago today, gold was 30% lower. Any of them telling you to buy gold? Of course not. So here's what they're saying. They said that with the 401k style plans, which have replaced the traditional pensions as retirement mainstays in the workplace, the plans feature tax-saving benefits, right? Well, is it a benefit? Is it? They tax you on your income after the 401. Here's the bad part about that. Now your 401k is what? Now you're a partner with the government, aren't you? Because it's not yours. Oh, no. You know how they work. Hey, it's not yours until we're done getting our taxes. And the only way for you to pay less tax in a 401k, by the way, because there is a way. Yeah, there is. Right? It's to have a real small amount. That's how you do it. And guess what? For a lot of people, it's perfect, right? I don't really have any money in it anyway, so, you can't tax nothing. Nothing of nothing is still nothing. But if you've actually got money in there, it's not a great thing. Right? And I know we got this Trump tax cut remember, that tax cut, by the way, everyone forgets this. You know that expires in a couple of years, right? Not for the businesses, not for them. But for all you people that actually did get a tax, that goes away in a couple of years. Shh. Here's the problem. In a couple of years, not only does that go away, they're going to have to add to it. right? So I don't know how great that really is, right? And again, they treat it like income. When you hit 70 and a half, they force you to start selling. If you have a lot in there, right, let's just say you did have $1 million. Well, 70 and a half, the government says, hey, you need to take $100,000. And by the way, we're going to add that to your income. So whatever you made on Social Security plus the $100,000, we'll just take 33%. Thank you. Oh wait, and then you got to deal with your state too. You got to get that. How about let's call it an even 40. Call it good. Right, here's your 60. Thank you. Here's our cut. Thank you very much. Right? Can you imagine if you lived like in California? It doesn't matter where you live. Taxes are going to go up. You know that. They said that unlike traditional pension plans. Well, we ran out of time. I'll finish up with this when we return. Patriot Radio News Hour. How much does your portfolio weigh? Here's the problem. I don't think it weighs enough. We'll be back after the break.
This is the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Mrs. Schlafly was a courageous and articulate voice for traditional values and common sense for more than 70 years. Now, continuing that legacy, the president of Phyllis Schlafly Eagles, Ed Martin.
Reports on new leaked documents from Google show a new policy that the tech giant is adopting called the, quote, respectful code, end quote. This mix of algorithm and personnel monitoring will seek out newly deemed politically incorrect terms and eliminate them. The target is apparently not just to eliminate unwanted language from internal Google systems, but from public searches as well. This new policy of fighting, quote, disrespectful terminology, end quote, will be Google's way to fight hatred, intolerance, and bigotry in society. One problem, however, is the chaos that will ensue from such subjective power being given to Google employees. One of the specifically targeted phrases in the leaked Google documents is that of master and slave. One might interpret that to historically mean the ownership of another person, but any technology worker will quickly say it's as common a phrase in the tech field as male and female are to describe a type of cable connection. A master-slave connection is a model of communication where one device or process has control over one or more other devices. Eliminating such a phrase from the coding of a technology company is almost as ridiculous as insisting scientists recognize more than two biological sexes exist. This is yet another push from big tech proving that they don't want to be a platform or utility. They want to be the conscience of every individual in our society. It's high time more Americans realize that Google doesn't promote free speech and that they're out to define and control speech. At the very least, it's time for some serious investigations into the size and scope of control that these organizations have over our ability to communicate and the ability of our society to operate free from censorship based on political opinion. Google, Facebook, and other tech giants are quickly positioning themselves to become the enforcement agencies of the statist left. It's time for Americans to stand up to digital tyranny against the First Amendment before it's too late. We, the people, must demand action and accountability to defend our rights.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Political correctness is no longer simply about restricting speech. This tool for tyranny has led to employees being fired, pastors silenced, small businesses closed, and truth suppressed. Thankfully, the politically correct can't censor the work at phyllisschlafly.com. Join us, won't you? At phyllisschlafly.com. And thanks for listening to the Phyllis Schlafly Report.
Hey, we're back, and you have to do the options they give you. Right? I'll say it again. Join our metals program. You don't have to worry about all this stuff with this 401k nonsense. You know, and you know what? Here's the thing. Great, ready? You know how many fees are involved? None. Zippo. What does it cost to set up? Nothing. Right? What if I want to cancel it? What does that cost? Nothing. What are the taxes on it? There aren't. Well, they're not because they're not pre-tax, so you don't have to a tax hit coming Then obviously if you got capital gains down the road, yeah, you got to do that. You got to, that's just life. So we're sitting here talking about these 401ks, and it's just horrible. They're talking about, unlike the traditional pension, you didn't have to worry, right? Hey, I know what I'm going to get. It's in my contract. I'm going to get this much a month, and they're going to pay my health care. That's it. I didn't have to worry about taxes. I didn't have to worry about checking a box. Right? Well, I mean, which box do I check? I don't know. What are the fees? I don't know. So here's what's been happening. Workers are left to fend for themselves. Think about how does that make sense? I mean, I know when I worked for a big company, we had a meeting every year, once a year, have a 401k meeting. They handed out this folder. And inside the folder was a bunch of... It's like the gold dealers on TV. Call now for the 16-color free brochure. It's a ripoff. I'm sitting there and I look at these folders, and they were in color and all. They were fancy. Each folder today, probably runs $30. I mean, that's how much crap was in there per person. $30 worth of paper, right? Worth of charts and graphs. And then the lady handed it out. And I'm in this meeting. There's a couple hundred people in it, right? Because that's who was everybody that was in the office there was in it. And hey, look this over, and if you have any questions, you can call us. But just check a box, and and that was it, right? The whole thing. It wasn't even 30 minutes. Apparently, a lot of people don't even get that. They're saying that the lawsuits are starting to skyrocket with poor investment choices, high fees, and lack of transparencies and other problems leading to subpar results. There's a backlog of 401k lawsuits a mile long. And they're saying, here's what's so funny. 8 lawsuits total were filed in 2006. When the stock market crashed, it jumped to 107. It bottomed at 2 lawsuits in 2013. But guess what? Been on the rise. We're not quite at the record highs. But now 50-plus lawsuits a year after year, rolling in. And these are class action lawsuits. This is entire people in their 401k, the whole thing. Now, here's the problem when you do this. Even if you win, the money goes to the lawyers, right? That's the problem. And they're saying that and I'm just adding up and they don't have data for 18 or 19, just in the last 2 years. 107 401k plans have been sued. And guess what? 60% of the cases still pending. 20% were dismissed. Another 20% were won. So right now, 1 out of every 2, the 401k administrators lose. Number 1, fees. They lie, right? Excessive fees, making it so hard that people can't understand what it is they're really doing. And you think about this, the best you can do is about 2%. Think about that. Kind of, remember what inflation's supposed to be? 2%! I'll see 2%! Right? Here's the problem. Most people don't get 2%. A lot of you are playing 4 and 5%. Don't even know it. Don't even know it. You know what the next thing they sue over is the choices. right? Lack of being able to be diversified. Here's what they found out. A lot of these 401ks, these administrators, they only want to offer you the stuff they have, right? So you're pigeonholed into buying what they want. See, they're supposed to all be these fiduciaries. Oh, no, we've got the best interest in you in mind. Apparently they don't. Apparently, a lot of these places say that they do, but then when they actually looked at the plans themselves, they found that the companies operating these plans weren't giving the people choices that were outside of the stuff they actually offered. Here's one. How about this? Anthem, the health insurance company, they're huge. Huge. They paid $24 million. Franklin Templeton Investments, $14 million. Brown University, $4 million. Right? The list goes on and on and on. They're in your wallet. And now you've got the former Federal Reserve Chief of New York saying, oh, the president, he's making, you know what? This trade policy is ridiculous. We should just let the Chinese win. And you know what? We should make sure that we don't cut rates so he doesn't win re-election. Let's crash the economy. That's from our bankers. You haven't figured it out yet. You know, my uncle always used to say, if you're at a card game and you don't know who the patsy is, see, we're at this card game. We're playing against the bankers, right? We're the patsies, in case you haven't figured it out yet. Right? Guess what? Here's what's funny. It's so bad that other central banks around the world rather buy gold than buy U.S. dollars. 800-951-0592. About 20 rolls. This is it. The last 20 rolls of silver quarters at 130. When we get back, I'm not going to have time for Social Security. I'll save that. When we get back, we're going to talk rates. 800-951-0592. Gold's up 16, 17, 15.43. Silver's up 50 cents, 18.14. This is about it. I think, where's one person on hold? Wendy's talking to another. Got two lines open. This is probably the end of the rolls of silver quarters at $130, which is pretty much buying silver at spot. You're welcome. We did the same thing not even 10 days ago. That was back at $17.06. Get ready. Silver is going to continue to catch up. Problem is they're going together. The Dow is down about 150 points. The inverted yield curve gathering speed now. So the difference in the spread between the 2-year note and the 10-year note widened now. Now you're getting more interest on a 2-year note than you are a 10-year note. And now that inversion has spread. It's gotten wider. We are about 1 basis point away from a new all-time low in the 10-year note. And I've heard different stories. I think the all-time closing low was 137, but it's somewhere, I heard one person say it was actually 145. Another one said, it's 132. We're right there. We're right near all-time record lows on the 10-year notes. Housing prices rose. The only real big economic data today, housing prices rose at the slowest pace since 2012. And again, this is part of what I worry about as we watch and how far behind the Federal Reserve really is. Because one of the things that I guess when you hear people say, oh, the yield curve inversion, it doesn't mean that we're going into a recession this time. It's different, right? It's always, every time is different. But it's really the same. We have debt problems. This is why you have these artificial bubbles created by these private guys who now are going out and telling you to let the Chinese win. I mean, that's what Bill Dudley said today. Let the Chinese win, and let's turn the Federal Reserve into a political weapon to get what we want. And really understand what the mission is. Money's an idea, right? Federal Reserve notes, it's a piece of paper with ink on it. That's all it is. And it only has value for as long as people say it does. And it's been this way forever. We're not the first people to try to do this. You know, and money, fiat money's been around since like the Ming Dynasty. They all go to zero. That's what they're supposed to do. I mean, you won't get Jay Powell to come out on TV and say it like that, because if you heard that, you wouldn't be real happy, would you? But remember, I've been telling you, our money, our wealth, it's not our money. Money's an idea, really. The only thing that's really money is gold. Gold is money. Gold's been money for 5,000 years. Not a couple hundred. 5,000. All the other things that they've tried to have be money goes to zero. And I've been warning you about how our wealth is under attack. See, wherever you've accumulated your money, they want it, right? Your 401k, they love that. Put it there. Yeah, good. And I don't want to trash the 401k because there are a handful of good ones. But they want it. Your money markets, your IRAs, your 401ks, your annuities, your mutual funds. They changed the laws after the crash. Shh. Don't worry, we did it for your own good. Okay, right? Was it for our own good? Or was it for their own? Because think about what they decided. Hey, the next time it crashes, and we know there's going to be a next time. Is it this year, next year, the year after? Does it matter? Soon. Right, we're closer. Every day we get closer. Here's what they decided. No more self-direction. No more going to the sidelines. No more ability to sell whenever we say so. How does that protect you? Oh, wait, it doesn't. Now they're talking about, hey, we got a problem in the bond market. People aren't going to the auctions. Remember what happened in Germany, right? They tried to sell negative yielding 30-year notes, right? Nobody wanted to buy them. And we got that problem here. I tell you about the bid to covers and how they just keep falling little bit. Here's the problem. Little bit. All of a sudden, it's a lot. Nobody wants it. Quantitative easing's coming back. Rates, whether the Federal Reserve, look at the Federal Reserve can't even control it now. They're just going to go where they're going to go. Here's the problem. I'm not worried about the down. The real pain is what? When it shoots back the other way. That's when you'll all be broken. 800-951-0592. Patriot Radio News Hour, final segment on a Tuesday. $800-951-0592. I wasn't going to be able to get through all the Social Security things, but there was an article about the 7 Social Security myths that aren't true. Unfortunately, I don't know about that. All of them are true. Some of them truly are not true. But the biggest one certainly is. We'll talk about that. It will obviously depending on what the news is tomorrow. But if I got time, we'll talk about that because that's next. And I know you've seen it. You've seen the rumors about the need for cuts to Social Security and Medicare, or increased tax. I mean, it is what it is, right? Lockbox, trust fund, real, fake, it doesn't matter. The realities are that it's rising at a pace. It's not 2%. Right? We should try. You know what? Let that be the inflation gauge, right? There's no way they do that. Right? Hey, we can't offset. If we can't offset medical when the price of a TV went down, we'd be sucked. So if you plan on being around for like the next 5 to 10 years, I highly, 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 highly recommend you put some gold and silver away at 800-951-0592. The Dow's oscillating between down 200 and 150. S&P's down 15. The Nasdaq's down 50. Like I said, it talked about it. Gold's up, silver's up. U.S. $20 gold pieces today. They just don't stop now. 16.25 for U.S. $20 gold pieces at 800-951-0592. Gold is in that realm now, broken through that 1535, sitting here in the 1540s. Yesterday got to 1550, right? We're looking. Here's the problem. Everybody kind of is baking it in the cake, rightfully so. 1600 is going to be here soon. The thing is that's another gap level, right? So we're getting ready now to start working on the second gap up. We've done the first gap. The first gap up was 1,400 to 1,500. Happened in less than 30 days. The next gap up is 1,585 to 1,700. Now we got to get 1,585 first. But here we are, right? We're $40 away? Then you gap up to 1,700. Of course, then the last gap up is what? Back to essentially right near all-time record highs, which really isn't that far. I think it starts at like 17.25, maybe it's 17.40. I'll get that. You know what? Before the end of the week, I'll try to get you the second leg, the third leg, so you guys can know what's coming. And this is kind of the problem, right? You're seeing gold spiking, silver spiking, the yield curve inversion now widening out. So not a great sign there either. If that continues, look out for another major down leg in the Dow. We'll see. We'll hope not. But after what Bill Dudley said today, things at the central bank are getting a little scary.